Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague Yatin Mota joining from the studios. Yatin, what a solid clawback from days low. We are solidly in the green. The tug of war between Bulls and Bears was rather won by Bulls today. We did start on a very muted note, but second half we saw the Bulls really pick up pace over 200-point recovery on the Nifty. In fact, firmly above that 24,700 mark. We've even reclaimed that 100 DMA level of 24,704. So yes, a very solid recovery. And remember, of course, the GST Council meeting is also underway. Discussions around the two-tier GST rate slab, the structure is underway, and perhaps announcements will come tomorrow. But still, good rally in the market today, led by Metal Pack. Yatin, your takeaway, second half, the bulls really took off.
Yeah, absolutely. And we had an intraday recovery of nearly 200 points on the Nifty. Yesterday, the market was volatile. Obviously, there was the impact of weekly expiry. But today, on Wednesday, we had a strong start to the markets. Advanced decline ratio also looked healthy at nearly 3:1. Particularly, if you talk about the FNO gainers, we had a lot of traction in the pharma space, in the metal space. However, talking about IT stocks, they were slightly nervous. Probably the US might plan to curb visa requirements, or probably they could restrict the IT companies outsourcing programs. That is speculation now in the US media. So barring IT and a couple of stocks, I think the general market mood was quite strong.
That's true, Yatin. And Metal Pack, of course, you'll be talking about it in details as to what the triggers are really, but the index, up 3%, sparkling, so to say, third straight day of gains coming in on the Metal Pack. Also, the good part is that the pharma index managed to stage a very good comeback. Last two sessions have not been very great for pharma. And of course, the banking index, Yatin, the Nifty Bank Index, staged a good comeback today. Yesterday, it was attempting a comeback but ended in the red. But today, banking names also did well, and that's something that the market will really take heart from, given the fact that the Nifty Bank has been underperforming, the other sectors over the last couple of weeks now. But yes, in terms of individual movers, metal names, of course, dominating the list. The likes of Tata Steel up in excess of 5%. Even Hindalco, that stock was up 3%. You have JSW Steel, Coal India. So metals were dominating the gainers list. Aside of that, you had IndusInd Bank. That stock was also up somewhere around 2.5%. Titan, discretionary stocks, in focus ahead of the GST Council meet outcome. And M&M also staged a good comeback after yesterday's selling pressure. Trent, ITC, these are some of the other movers. Even Eternal that has hiked the platform fee, was up somewhere around 1% or thereabouts. What didn't do well, as you mentioned, technology names were out of favor. So Infosys, HUL, I beg your pardon, TCS, Wipro, these were among the laggards. From the FMCG pack, HUL, Nestle, these came under some bit of selling pressure, although the FMCG index per se ended the day in the green. SBI Life, ONGC, Bharti Airtel, Axis Bank, these were some of the other laggards. But yeah, I think there were quite a few, stocks that continue to do well, the likes of Ola
Yeah,
Electric and even NetWeb for that matter,
correct.
Order Wins and TPO Tech. Take us through
Yeah,
some of those names that were really buzzing in trade today.
yeah. Correct. So now talking about TBO Tech, they announced one US acquisition, almost 1.1 times sales in terms of valuation, almost a 1100 crore acquisition that will strengthen the presence in the US markets in the travel domain. So TBO Tech, that stock moved 15% post the acquisition news. NetWeb 12% higher after they got orders from Nvidia. Ola Electric, and that stock continues to be on a roll. On the quarterly numbers day, the stock was at nearly 50 levels, and now it is almost at 70 levels. So almost a 40% rally that we have seen post the quarterly numbers. PPL Pharma was the top FNO gainer, 8% higher for that stock. What was not doing well is Phoenix Limited down 3%, eClerx down 3%, and other stocks like Indus Tower also were reeling under pressure. Indus Tower corrected almost 4% post the announcement of foraying into the African markets, but ended the day lower by only 1.5%.
All right. Even stocks like Industars that were under extreme selling pressure managed to cut some losses, and of course those names that you mentioned continue to gain traction, the likes of Ola Electric. Let's talk about the stocks that are on our radar. But before I come to that, here's a message for our viewers. Now, we're introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading, and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today. Well, on that note, taking a look at the stocks that are on our radar, in the stars you mentioned, Yatin, let's talk about that. Of course, that was under, fair bit of selling pressure, although ended the day off its session lows. Of course, it has got the board approval to foray into African markets, beginning with countries like Nigeria, Zambia, as well as Uganda. Now, the company is expanding its footprint in global markets or international markets, and this is in fact, its first ever overseas expansion, so to say. Now, the company believes that these markets will provide attractive prospects for revenue diversification, scalability, as well as long-term value creation. Company, of course, has said that it will leverage its robust financial position and its anchor customer relationship with Bharti Airtel to establish a strong presence in these markets. But of course, this has led to concerns about the dividend payout, right? Because the company hasn't really been paying dividends for the last 3 years since May 2022. So now there are concerns that cash flows will be utilized to for expansion and not towards rewarding shareholders with dividend payout. Of course, as I mentioned, the company has not been paying dividends for the last 3 years. In fact, because of concerns about the health of Vodafone Idea, which also from where also it is when there are funds due from Vodafone Idea, which it hasn't really been able to get access to. So of course, Vodafone Idea is a key customer of Industars, and it is of course actually awaiting some bit of clarity in terms of what the government does in order to help Vodafone Idea. But in terms of what the brokerages are saying, they have maintained their faith in the counter. CLSA, in fact, has a high conviction outperform rating on the stock, although they have cut their target price from 595 rupees to 520 rupees. In fact, they've mentioned that Nigeria, Uganda, and Zambia, the places where the company is looking to expand, have only 500 towers out of the 37,500 towers of Airtel Africa, and hence the potential for revenue diversification looks fairly limited. That's what CLSA believe. In fact, CLSA also says that the company management is expected to focus going forward on improving the capital structure by paying higher dividends. So, in a way, CLSA is saying that concerns over dividend payout are a little overstated. Even though it does say that the delays in dividend payout was unjustified, given the fact that the board had committed to reinstating these payments. If you look at Citi, they also maintain that they have a buy rating target price is a little lower at 460 rupees. They've also said that concerns around dividend payout, Vodafone's sustainability as well as Bharti's slowing rollouts are overdone. In fact, it sees potential for medium-term growth and robust free cash flow generation as well. In fact, it says that capex intensity is moderating and which provides ample room for shareholder returns going forward as well. In terms of valuation, Citi says that the valuation for Indus Towers compared to its peers is looking much more attractive, and their bear case, is saying that the downside is limited from here on. So that's a positive view coming in, but the stock did hit a 52-week low in today's session, and it has also maintained that any relief from the government side for Vodafone Idea will lead to a positive chain of events. But all in all, the company, as I said, has not been paying out dividends, which is why I think it led to some bit of concern. The stock has already been in a downtrend. If you look at the last 1 year charts, you see the stock has been under pressure. But looks like the downside is limited, as Citi has pointed out.
Yes, and I think Nandita, the stock has been reeling under pressure clearly because of the lack of dividend payment, which the management in a recent roadshow in Singapore said that they are looking to pay out dividends. But yes, with African operations and African, expansion, there could be some diversion of cash flows which might lower the dividend. That is the concern, because of the stock dipped nearly 4% to hit a fresh 52-week low. However, it recovered from the day's low. But what was shining in trade was clearly metal stocks, especially the steel stocks were looking quite robust. In fact, Tata Steel was the top gainer in the metal pack with 6% move coming in, and entire metal pack was the top sectoral gainer as well. Talking about steel stocks, the latest news from China indicates that China is looking to cap or look at some bit of pause on the production of steel. In fact, if they are able to do that, according to the CLSA estimate, it could be almost 8.5% decline in China's production capacity on a year-on-year basis. Now, lower steel production means that there will be a global stability in steel supply as well as steel prices, which would benefit the overall sector on a global scale. Now, CLSA believes that the efforts for the demand supply mismatch in the past 18 months have yielded limited results from China. But now, if the government is looking to curb the overall steel production, smaller players get churned out. There will be a consolidation in steel capacity, which will benefit ultimately the industry. According to the FY 26-28 EBITDA estimates, CLSA has revised it higher by up to 8%, and they expect that JSPL is something that they will watch out for and remains one of the preferred picks when it comes to the steel pack. And also they continue to favor aluminum given the tight demand supply globally. So aluminum non-ferrous stocks are also on the radar of CLSA, but clearly China's anti-involution is something that as a theme would benefit metal stocks.
That's true. I think we were talking about how anti-involution drive is benefiting Reliance Industries yesterday, and of course, it also benefits metals. And we did see such a strong rally coming in on shares of Tata Steel, JSW Steel, etc. With Tata Steel, of course, gaining somewhere around 6% in today's session. A lot of other factors also, Yatin, at play: weakening of dollar index, and of course, and impending rate cut by the Federal Reserve in the upcoming policy meeting mid-September. Those are also some of the factors that are driving metals higher, really. And that's why we saw gains for a third straight session. But the other stock is from the pharma basket. As you know, the pharma pack itself staged a good recovery today after 2 straight days of weakness. But Glenmark in particular was in fine health or in the pink of health today. In fact, the stock itself has been in the pink of health. Uh, in the last, I think, 1 year or so, the stock, or 6 months or so, the stock has rallied somewhere around 50% or thereabouts. So, yes, this stock, another trigger today was a very optimistic or positive report coming in from Investec on this particular stock, where they have a buy call. Target price is at 2,510 rupees. In fact, Street is already very bullish on Glenmark, given the fact that the company back in July had clinched the global licensing deal for cancer drug with AbbVie. And post that, the stock did hit a record high. Now, after AbbVie licensing, Investec believes that the next milestone for the company should be its atopic dermatitis drug called Star 0310. Now, Star 0310 was developed by the subsidiary of Glenmark through its innovation arm, IGI. It had licensed it to Astria Therapeutics for further development and commercialization. Now, once this drug also clears regulations, that could lend credibility to its specialty pipeline. That's what Investec says. Other catalyst, according to Investec, would be the clearance of its US Monroe unit, which got 5 observations from US FDA, back in June. But there were no issues relating to data integrity. There were some issues in terms of manufacturing lapses. But this will be a key catalyst according to brokerages. Investec also points that out. Aside of that, niche approvals in US will also serve as a catalyst for the stock going forward. In fact, Investec also says that the $700 million upfront payment that it got from AbbVie would further strengthen the balance sheet of the company. HSBC also came out with a note wherein they have a buy call. The target price is at 2,380 rupees. In fact, they've also said that its innovation arm IGI would be a self-funding unit, which means that the company can continue developing new treatments without putting extra pressure on its balance sheet. I think that's another fact that the street cheered. In fact, steady debt reduction, will be key going forward, and also the FDA clearance for its Monroe unit, according to HSBC. In fact, it has also said that FDA approval for its respiratory drug Flovent will also be among the key catalysts that could, drive further up move on the stock because it will boost the earnings visibility going forward. And yesterday, in fact, Glenmark has also launched, a breast cancer injection in the US. So yes, that was another factor that was at play. But as I mentioned, the stock has seen very good up move in the last 6 months. It's up 50%. In the last 3 months itself, the stock has rallied somewhere around 30% or thereabouts. Now, some of these factors that these brokerages have pointed out, if any of them, fructify, then, the stock could take off even higher from here, Yatin.
Absolutely, and in general today there was, apart from metal, the buying was there in the pharma stocks, be it Glenmark Pharma, be it Piramal Pharma, be it Syngene. Today, was a day wherein we saw a good amount of momentum in all of these stocks. But yes, Glenmark Pharma on your screens trading above that 2000 mark, 5% higher for that stock.
All right. Those were about all the stocks that were in our focus. But I think the two slab rate structure being discussed at the GST Council meeting, and also that EV four-wheeler, the EV luxury car the tax panel suggesting that the GST should go up from 5% to 18%. That also something that the street will watch out for, and also in terms of insurance, whether it will be exempt from GST or not. So lots to watch out for. Of course, today being the first day of the meeting, I think there's a press conference later on in the evening. But tomorrow, after the conclusion of the second day, we can expect some announcements. And Friday is when we will hopefully be reacting to all that news flow. And of course, we also have the payrolls data coming out of US that will be important. But I think those were all the stocks that were on our radar this afternoon. Yatin and me, from Yatin and me, thanks a lot for tuning in. Of course, we will see you again tomorrow. But before I go, here is a message for our viewers really on the Super Pro that the app that you guys must download because you can get AI. I think it's download the Money Control app and Super Pro. That if financial freedom is your goal, perhaps this is the app that will help you achieve it.